So thank you very much, everybody, for coming tonight. I know the traffic is always unpredictable, but glad you made it. Thank you also for Brian Cave for hosting this event. I don't know if we have a representative from Brian Cave who wants to say a few words.
Oh.
Yes.
It's great.
Yes, so if you want to say a few words.
Well, thank you. Welcome, everyone. Thanks so much for joining us tonight. We think it's going to be a terrific program, and we always love working with BayPay. So Brian Cave is really glad to have you here tonight. So thank you and enjoy.
Thank you very much. So we did several events here at Brian Cave, and we've done also events in Atlanta that we opened earlier this year. We will have an event this August on payment topics, of course. We're preparing something in Santa Monica, also at Brian Cave has an office there, and in New York also, that's events which are coming. So, as you know, our mission is to create business opportunities through discussions and emerging trends in the payment industry. So this month we're pretty busy because we have 7 events. We have 3 events in the US and 4 events in Europe, between Paris, London, Paris and Luxembourg. So we're working over there with KPMG. We have a partnership in place to organize this kind of events on a more regular basis, using also their offices to do that and bring people together and bridge also between Silicon Valley and Europe, because there are a lot of people coming back and forth. So I think on the topic of payment and commerce, there is a good fit to mix people and connect people. So also you've seen you can become a paying member. So it supports our cause and gives us more resources to do that. But also you get free access to social mixers we organize on a regular basis. And we just are beta testing right now a new auction system for tickets to large conferences. So we did a first test. We put $15,000 of tickets available. So some are worth $2,500, some $3,300, and you can just bid, and somebody won it for $60. So because it's not very well known right now. So please take a look. It's reserved also for social members. So we're going to start tonight on, we'll have short presentations just to get a sense of who is speaking and what are the companies behind the speakers. And then we'll have a panel discussion. So if, but John, you're right here, if you want to start. And
what do I do?
Here? Yeah, you come here. And,
hello, everyone. Can you hear me okay? Excellent. Good acoustics. Okay. Hey, Rob. Rob, can you hear? Hey, all right. All right.
You can use a clicker.
Thanks. Excellent. Okay. So the theme of this panel discussion is Bitcoin. So I'll tell you a bit about BitNet. BitNet is a payment processor. We enable merchants to accept digital currencies, such as Bitcoin, as payment for goods and services. The problem we're trying to address is that online commerce has become global, okay, along with the internet, but payments is still struggling to do so. The card networks are using technology really developed in the 50s and 60s, and we spent a tremendous amount of energy excuse me, trying to reverse engineer that technology to work on the internet. Enter stage left, the Bitcoin protocol. It's our conviction that the Bitcoin protocol has turned the global public internet into a secure payments network. The internet is before Bitcoin came along, was useful for transmitting data. Now we can trust that data. And the killer app, we believe, for that is payments. We'll see other apps, as I'm sure, but as we sit here today, that's what we're working on. A quick background on our team. Primarily, we come from CyberSource, which was acquired by Visa about 4 or 5 years ago. Some other logos of other whistle stops the team has had. Most of our programmers are based in Belfast, in Northern Ireland. I'm based here in San Francisco, along with some market-facing folks and a few programmers. Value prop, yeah, most of this is not really unique to BitNet, really. What we've done is taken the best of Bitcoin, okay, that the appeal to merchants, and created a service layer that insulates the merchants from some of the downside of Bitcoin, like the volatility, the need to have cryptographers securely handling private keys. We worked with a lot of partners to do this, some multi-sig wallet providers who will be on this panel. So what we have done by creating a processing platform that effectively uses the Bitcoin protocol and the global internet as the payment networks is to eliminate banks, at least on the processing side. We still need banks to settle the funds to merchant accounts. But the notion being that interchange is gone. Chargebacks are gone. It's a push payment technology. As a result, we can guarantee payout. We can guarantee the payment to a merchant in their currency of choice to their account of choice. And any fiat currency, we're up to about 60 currencies we can settle out in. We insulate the merchant from price volatility. They actually receive the amount that they charge the consumer at the time of the transaction. BitNet handles the price volatility, converting the Bitcoin back into fiat currency. And again, it's instant global reach. Our merchants are now accepting payments from consumers in countries they otherwise probably never would have reached. And they're getting a big part of the early adopter story for Bitcoin is exactly that. It's consumer acquisition. The average is 50 to 60% of the consumers on the merchant sites are new to that site, and that's pretty exciting. That's all I got, Danielle.
Okay, great.
Okay,
Thank
thanks.
you very much for the time.
So I'm Senior Vice President of Strategy from a company called Zappo. Just quick show of hands, has anyone heard anything negative about Bitcoin? Hacks, bad press, anything? Mike has heard some, okay. So we specialize in Bitcoin security. We're a hosted security solution. We secure people and their Bitcoin, and we keep them, we protect people from themselves, essentially. And how we do this is we're an infrastructure layer, and we use technological security. We have our own proprietary encryption and various other pieces of technology, both on the hardware and software side that we use at all of our sites. Physical security, we have all these storage sites that are egregiously highly secure, and I'll show you one of them in a second. And then jurisdictional security, we've built these all around the world, essentially to insulate us from multiple types of harm, one being regulation, one being force majeure, acts of God, etc. So this is actually one of our vault locations. This one's in Switzerland. This is the one that we showed the world. Every other one is top secret. But this is an ex-military facility. It has armed guards, biometric security. All the servers are wrapped in Faraday cages. It can actually take a nuclear hit. At least that's what the marketing materials said. So how we've built on top of all this is we have the wallet, which is your fast, easy, instant way to spend Bitcoin. The vault, which is a little higher friction for good reason. It's super high security. Ways for people to get in and out of the ecosystem. And then we also have a debit card, which is on the Visa rail. It works anywhere Visa is accepted. I have one in my pocket if people are interested in looking at it later. It's also, get this, chip and pin enabled, and that's, we're in the US. So from these products, what we initially started at was a custodial services business, and this catered to high net worth individuals, hedge funds, investment funds, and essentially we hold large amounts of Bitcoin on behalf of other people. We've also built from the platform numerous consumer adoption initiatives using our infrastructure layer. We just announced our integration of Taringa. It's Latin American Reddit. Do people know what Reddit is? But essentially what we've done is every upvote is now a tip in Bitcoin. And we've rolled this out with some of the largest content creators in the Taringa network, and we're beta testing it with about 1,000 of them. And we'll do a full go live, I think by the end of Q3. gaming, we built a Minecraft server and powered it with, so when you dig for stuff, there are these things in Minecraft called emeralds. Those are actually 1 bit, which is a denomination of a Bitcoin. And so we opened that up to the world, and we've actually had a lot of growth in the server. We did partnerships with Civo and Elite, and so enabled sort of tournament-style betting with Bitcoin for games like Counter-Strike and various others. And then with our debit card, we've done programs with companies like Bitwage, where we offer our debit card to their global user base who are getting paid out in Bitcoin. And our view of the world essentially is, this slide shows you, 1 billion fixed phone lines turned into 6 billion mobile phones. We think that Bitcoin offers a unique opportunity to become bank of the world, and that's why after building all this infrastructure and servicing the sort of institutional folks, we've now switched over to that consumer side and are trying to actually get bank accounts, so to speak, in the hands of anyone who can have a smartphone.
Very good. Thank you very much. So we're going to get to the drinks much faster than expected.
You said keep it short.
Yeah, and you did. Thank you.
Can people get your cards yet?
Not in the U.S.
Where do I have to go?
If I can send it to an non-U.S. address.
I can use it in the U.S. as long as I.
It works in the U.S. Yeah.
So I'm Micah Winkelspect. I'm the founder and CEO of GEM, and we're based down in Venice, California. Although I feel like I live up in San Francisco most of the time. So yeah, we're connecting the world with digital money. We launched at TechCrunch Disrupt back in 2014. The company started just by me working as a developer myself, so I'm a developer by trade. Was working on an open source library, contributing to Bitcoin wallets, and I recognized that there was this massive need in the market. I'm going to go into that, but what are we? We're basically a universal wallet platform for building any type of Bitcoin or blockchain app, and I say blockchain instead of Bitcoin because there are, as you may know, lots of different digital currencies that are somehow tangentially or directly based on Bitcoin. Our wallet was designed from the ground up to be able to support any type of digital asset token, but Bitcoin is by far the market leader. And we do this security without the need for trust, and I'll explain how that works. So our team comes from PayPal. Our COO Ken Miller led the fraud detection. He was VP of Risk Management at PayPal for 7 years. Also at Intuit Payments. Recruited out of Palantir. We have guys who are enterprise security, Bidium, which is single sign-on for enterprises, and so on and so forth. So it's about access and authentication and authorization. So I'm not going to go too deep into this, but what is the blockchain? So most people think of Bitcoin as this form of digital money that we can move around the world, but the applications of the blockchain are much greater than that. And so the way I like to describe what the blockchain is it's the operating system for distributed applications. You can now build all different types of applications in a distributed, trustless manner on a distributed network. And the applications for that are extremely broad. Anytime you take a system that is typically centralized, like banking or payments, and you distribute that system out to edge nodes, you're essentially massively disrupting that system from the core. So Bitcoin is starting to do that with payments and money, but there are so many other areas where this technology is going to apply. And we're beginning to see little pockets and little seeds and projects in all these areas by developers around the world starting to disrupt these massive, massive industries. And it's very exciting, but it's at a very early stage. So who cares about this technology? Well, a lot of people kind of laugh at it, but the guys who are taking it really seriously are developers. And just to show you sort of the growth and development, this is just projects on GitHub that mention the word Bitcoin over time. So you've got about 27,000, the last time I checked, it's a couple months old. So somewhere around 30,000 applications that are being built on GitHub right now by developers. So there's a fundamental problem that every single developer, when they get started, they have to start to solve, and that is that every application that's built on a blockchain needs to have a wallet. The wallet is basically your sort of digital access point to this technology. If you don't have a wallet, you can't really participate in this economy. So that sounds easy enough. What's the problem? Well, the problem is this: 10%. 10% of all Bitcoins that have ever existed have been lost or stolen due to poor wallet security. The wallet has to be secure or the system fails. And that's over $350 million has been lost in value because of developers that were either immature or just early building products with inferior wallet technology. So what is the solution? Well, in security, there's really no one solution. There's what we call defense in depth. And one of our goals is always to eliminate single points of failure. Well, Bitcoin actually provides some really good opportunities for us. One of those is something called multi-signature. And you may have heard this term thrown around before. You'll start to see it written in articles and things like that. This is a unique feature that Bitcoin has that, for instance, money does not. Multi-signature essentially means that we can actually program our money or our digital asset tokens to require multiple sign-offs or multiple signatories in order for you to move that token across the network. So you can think of like a lockbox with multiple keys, or a missile silo where one guy has one key and another guy has another key. They both have to turn the keys at the same time. Bitcoin has this baked in. So on our platform, we're a co-signer on every transaction that goes through the platform. So not only does the customer have to sign a transaction, but we also have to verify that transaction and co-sign it with them. Otherwise, the money doesn't move. The second part of this is that you can't just robo-sign everything. Otherwise, there's really no security layer added. Even if you have multiple signatures, if I'm just automatically signing, it doesn't really add anything. So that's where rules enforcement comes in. So multi-sig allows us to be able to add a layer here, which we call rules enforcement, and that includes things that you would typically think of as bank-level features. So, spending limits, velocity controls, multi-factor authentication, fraud detection, basically everything that you get from your bank that helps to secure your money, we can now build into Bitcoin and all other types of derivative asset tokens. And then the last part here is something that we learned from the banking industry. So in Bitcoin, your security is heavily based on your ability to secure and store private keys, which is why Zappo puts the private keys inside of a giant vault. And by the way, we also have vaults in Switzerland and Austria and other places. So the reason why we do that is because if your key is compromised, you lose your money. If the key is compromised, a hacker from any point in the entire world could take that key, run a raw transaction on the Bitcoin network totally tracelessly, or mostly tracelessly, and steal that money away from you. And so this is a really big issue, and that's why a lot of these wallets have failed. So we went to the banking industry, who's had the same problem for 20-something years. How do we securely store private keys? Well, the banking industry does a very specific thing, which is that they use what are called hardware security modules. There's actually a representative here from Thales. There you are, right? So they sell hardware security modules to the banking industry. We partnered with Thales to basically deliver a customized solution that actually works for the Bitcoin industry, because their devices by default don't work for the Bitcoin industry. They don't do the basic functions that Bitcoin needs. So we solved that, built a customized solution for the Bitcoin industry. So that's basically who we are. We secure Bitcoins on behalf of other companies. We power payment processors, payroll companies that are using Bitcoin, exchanges, and so on and so forth. But what's most interesting now is that just even in the last 6 months, there's been a huge uptick in interest from financial institutions and banks and really, really big entities that I would have never imagined when I started coding Bitcoin projects that they would take interest in this. And right now, it's happening very quick. Yeah.
Thank you, Micah. Paul is here or not? Paul Quay?
I haven't seen them.
No? Okay, not yet. Okay, so we'll skip to the panel discussion. So if you want to sit down here now.
Yeah, sure.
So it's too bad he's not here because he was supposed to give to every one of you a little bit of bitcoins to open a wallet and so on. So but maybe he'll come later. I don't know.
Now Johnny will do that.
Sure.
Everyone gives me their email.
Prepared.
Okay, so thank you again for being on the panel today. As you know, we've been following and supporting Bitcoin for several years now because we believe that there are business opportunities associated with this technology that are not fulfilled today by the existing payment stakeholders. In the last several years, we've seen different waves. The first one was kind of the technologists, the people willing to change the world, creating an unregulated currency and getting rid of the US dollar and other currencies. The second wave was a little bit the libertarians. Then we had the speculators. You had, I think the Bitcoin went up to $1,200. Now it's 240, between $200 and $300. And we've seen the rise and fall of exchanges. One of them is Mongox. It was the biggest at the time. But today we are in a kind of quiet period. But I think it's when things are done. So we'll see about that, if it's the truth or not. We looked also at different numbers in terms of funding. And if you look today, we are close to $800 million put into cryptocurrency companies, Bitcoin companies, and other Bitcoin $2 or $3. I don't know what's the number, but a new generation associated with the blockchain. Some of these companies are local. We have the biggest one is I think 21 with $116 million in one round, so 121 million total. The other one is Coinbase with 75 million. They are a few blocks from here. Then we have Ripple Labs with close to $30 million. And Itbit, which is a new trading exchange system in New York, I think, and Singapore, has raised around $25 million. So there are now a new generation of startups which have a lot of money to really build very scalable systems, I would say. But we are still at the beginning of what I would call a big experiment. I don't know if I'm wrong or not. You can tell me where I'm wrong on this. And this event is the first of a series of events. This one is particularly focused on Bitcoin, but we look at different aspects around Bitcoin, like the exchanges or the smart contracts or different things. And we ask everybody to help us to organize these events because it's for the benefit of everyone. So in our preparation call, it wasn't clear what was the limit between the blockchain, the Bitcoin, and can we go through again a little bit on the definition and what is different between a Bitcoin and a blockchain? Can you answer that?
Yeah, sure. So I would think of it like the blockchain is the infrastructure piece that allows you to build distributed applications, and Bitcoin is the fuel that you have to pay. It's the token that you have to pay to use that infrastructure. So the reason why Bitcoin has a value is not because it's just a piece of data, but it's a piece of data that allows you to access a distributed infrastructure that we never had before, and that actually has real tangible value. And that what that value is, we don't know, but we don't know what the sort of intrinsic value of that is. But right now, people are speculating on the value of that token, and they're speculating on the future value of the applications that will be built on top of the Bitcoin blockchain. And so that's where we get a market price. Yeah.
And I'll oversimplify it, but the way I explain it to people that I'm explaining it to for the very first time is that blockchain is a way to essentially prove that some event happened definitively at a single point in time. And then Bitcoin is a way to send money instantly for free to anywhere in the world with internet connection. That's a vast oversimplification, but that's a good way to sort of think about the two things as two different things.
Yeah, I often make reference, I think it's Metcalfe's law, right? It tries to measure the network effect, which I haven't committed the formula to memory, but it's not that complicated. It's like there's an exponent of like t plus 1, where, or n plus 1, where n is the number of participants that join a network. But because Bitcoin is the only unit of account that will work on that network, it has utility, and that utility increases as the number of participants increase on that network. And so in a sense, it might be the first quantifiable experiment, right, that that we can actually measure using Metcalfe's law, right? I mean, in the sense of trying to track the network effect with a currency, which is also the unit of account that works on that network. Another analogy I heard from Dan Moorhead at Pantera, and I thought this was very helpful, is it's a protocol. And this is the first time in software that we're actually valuing a protocol, right? Which I guess is an extension also of the network effect analogy I just pointed out. But again, I mean, this is the same answer, right? All of us came up with fairly analogous answers to the same question, which is that the two are inextricably linked. And that's the other point I like to make. Oftentimes I'll hear pundits say, love blockchain, hate Bitcoin. Like, love the technology, hate the currency. That's nonsensical. At least with the current design of the blockchain, that's just a gibberish statement for anyone to make. Now, there are experiments, right, where we're trying to come up with a Bitcoin-less blockchain, right? And I've seen some work being done on that, right? I'm not exactly sure how that's going to work. I mean, maybe one of you guys can take a shot if that's possible. Like, if you can have a blockchain without a Bitcoin.
Yeah. Do you want to go?
Sure. Yeah. There's just trade-offs to the different systems. So the reason why we have a Bitcoin currency and token, and the reason why Bitcoin is so powerful, is that it's the first time where we've had a network that allows us to exchange value without having to trust our trading partners. So that's done using the magic of math and cryptography. We get our trust from the math rather than having to trust in human beings. And so that is a value of the network. And if you want to have that value of the network, then you're going to have a mechanism that provides that value, and Bitcoin is the mechanism that provides that value. So, I mean, without getting too deep into the weeds on the technology, Bitcoin is responsible for the trustlessness of the Bitcoin network. Now, there are arguments to be made that maybe you don't need that trustlessness in a network. And so, for instance, when the banks start talking about it, they say, well, we already trust our trading partners. We don't. That's what the banks do, right? They trust each other. They've already built a network of trust. They have contractual obligations to each other. So then they start asking themselves, do we really need a proof of work mechanism or some other mechanism to provide this trustless layer? My argument to that is trust is not just, do I trust my friend to be there for me? Trust is also, do I trust in their security practices? Do I trust that they might be compromised? It's very possible that their computer systems will be hacked, that there would be a rogue employee at a bank that decides to tamper with the system. So trust is not just about, do I trust my neighbor? It's about, do I trust my neighbor's enemies? And so I always tell when the banks make that argument that you still need that trustless layer, and you can build trust on top of that layer if you want.
So I make the transition. You talk about trust, and something that comes, very often in the mouth of people working on Bitcoin and blockchain. So Mt. Gox was the first big exchange, and now it's gone. Can you tell us what happened and what are the lessons learned? Because I think it's what's most important in the whole story.
Don't build the world's largest Bitcoin exchange on a trading card platform.
But why don't you tell with the acronym?
The people in the back are hearing you because that seems a little hard to.
Okay.
Yeah, you can use the mic.
Okay. Yeah. Can you hear me? Where is? How does this work?
It's on.
It's not.
So the acronym Mt. Gox, we say Mt. Gox, but it's just MTGOX, which stands for Magic the Gathering Online Exchange. As Mike just said, it was a trading card platform, which changed hands, and unfortunately, the current owner at the time it got hacked and shut down. Apparently, had no idea what he's doing. He was off building like an internet cafe or something. And I actually spoke with one of the forensic, white hat hackers that pieced together forensic, kind of security analyst in Tokyo, where Mt. Gox was based. And he said it was an inside job, that basically somebody had put in a bot, a trading bot, that periodically and consistently sent Bitcoin out of the exchange into a public address on the blockchain undetected for years after this person had left the employ of Mt. Gox. And a rudimentary, reconciliation of the books at any given month would have caught that, right? And it went on for like 24 months. And so when they woke up to it, they had been trading effectively without reserve, right? And then it turned into a last gasp Ponzi scheme where they started monkeying with the bid ask to try to trick people into sending their Bitcoin to replace this reserve, and it went into a death spiral. They blamed it on something that didn't exist, which is called malleability, transaction malleability, which within 48 hours everybody had debunked that. But I think it's a good example of what Danielle was saying, right? The first wave of the technologists, or so-called technologists, right, that jumped on this technology to try to make a business out of it, clearly were inept, right? And not all. I mean, some of them are still kicking ass, but a great deal of them were attracted for the wrong reasons, okay? And I think that there's a second or maybe third wave of people who come from different perspectives, who come from different, industry, security, payment processing, banking, and we see the potential for this technology to both fix a lot of the issues that we've seen in some of these industries.
Oh,
hey,
hello. Sorry about that. Apologize, everybody.
I'm not sure this is working, by the way. Is this working at all? I'm like holding it up.
Close to the other guy, you're not
Yeah.
There's
Anyway,
nothing on the screen.
we're just, I was ripping on Mt. Gox because Daniel brought it up, right?
As many people have.
Yeah, exactly. It's an easy horse to kick, but it was painful, and that was just one of several kind of incidents that are in the rearview mirror, right?
So can we go to the lessons learned? Because okay, it's an inside job, but
Yep.
there are today many new exchanges, some with a lot of money, some not with that much money. So do you think it's they learned their lesson and they have more protection now as an exchange?
Just
Go ahead,
first,
whoever wants to answer.
Just so in general, maybe. But as a quick data point, Mt. Gox, the amount of value lost there was $750 million. The next biggest, I think, was probably Bitstamp. They lost about 5 million, I think. And then recently, Bitfinex, I think, lost what, like $5,000 or?
It was a little more than that.
Was it? But
Tens if not hundreds of thousands, but not in the millions.
Yeah. So at least at minimum, what we've seen is the hacks are much smaller now. And so, given where Zappos sits in the ecosystem, and that we are a security provider, we have seen a big thrust of these, guys that are probably in their mid-20s who are actually now focusing on security and hiring security professionals and professionalizing their entire infrastructure from the security side to the book side. And so the lessons are being learned, and I think it's going to happen more and more. And so ideally, we see less and less of these hacks, however big they are.
Okay, so maybe Paul, you can introduce yourself because nobody knows you here. Maybe.
Thanks. Apologies everybody for coming a little bit late, but my name is Paul Poi. I'm CEO and co-founder of Airbits. We are a company built also on digital security, providing consumers with the ability to secure digital assets themselves. So we have a mobile app for Bitcoin, iOS, Android, that allows you to send, receive, and store and secure digital assets, Bitcoin first and foremost, on your own device. So we believe in the true decentralization of Bitcoin and people being able to own and control their own funds. And that's about it. Happy to talk about what actually was being mentioned beforehand. With respect to the lessons learned, I think this is a really important thing. The lessons learned with Mt. Gox. Number one, security is getting better. And more seasoned security experts are getting into the space. But number two, you'll notice that some of these smaller hacks that have happened, Bitstamp, Bitfinex, the parts of the companies, the parts of their funds that were hacked were what were called the hot wallets. So these are the wallets that contain funds that were held in online access. Sorry about that. So these are funds that were contained in online access. So funds that are readily available to spend and to send out. So those are the most insecure funds that a company could hold, because this is a globally accessible internet server that you're dealing with. And when you put real money that is more or less untraceable onto a globally accessible internet server, you're asking to get hacked. So what we learned is that companies such as Bitfinex and Bitstamp only had their hot wallets hacked. And so if you're going to store funds for other people, ideally you're storing them in cold storage, in a vault, in a safe, buried underground, similar to what Zappa's doing with the cold storage vault aspect of it. However, for the sake of spending, funds that are readily available to be moved, it's imperative that those funds be held by the individual user. When those are collectively held in a central authority, then it becomes a huge target for hacking. And that's going to be very, very difficult to protect. And you'll hear that over and over. Even though the hacks get smaller and smaller, that's because the amounts that are being stored are also smaller and smaller. I can guarantee that if Bitstamp held hundreds of millions of dollars in that hot wallet, we'd be seeing another Mt. Gox all over again.
Okay.
So I'm glad that Paul's here to provide that perspective, because I respect his views on this. We've had this discussion many times. So I think there's still a problem with totally entrusting the end user to hold their own funds, which is that most end user security is pretty terrible, and also people forget their passwords, and they're just really bad at technology. And so I think that it's a very admirable thing to want to push as much as possible to the end user and have them be in full control. That said, and there is definitely a market for that. That said, I think that if we want to get Joe Consumer to trust in this technology, they are not going to be managing their own funds. And so you have these like middle grounds between an individual who holds all their funds and a third-party custodian service that holds all their funds. And that's kind of been the flavors that you've had to choose from up to this point, neither of which make total sense to me. And I think multisig is a really, really good middle ground. It allows you to have the ability to provide security on a transaction without ever actually taking possession. And so the way that can be accomplished, there's many ways to do it, but one of the ways is to say, let's say there's a wallet that has 3 keys in it, and only 2 of those 3 keys are required at any given time to be able to spend money. So you give the end user one of the keys. You have a service like ours, which is what we do, so we provide a co-signing service on that transaction. And then you have this third key, which is a totally cold storage offline backup key. Now, you can either give that to the end consumer, which we've found provides the same problems, which is that the end user is not good at storing their backup keys. Or you can do a 3-party model, which is where we're moving, where you have a third-party independent cold storage company like Zappo or like Elliptic out in London that holds the backup key for you. So now you have nobody that's in total control of the money, which means that nobody by themselves can run off with the money, and you can have lots of different protections in place. I think if we're going to make a scalable infrastructure, then we have to find better solutions like that.
Just to simplify what he's saying, essentially if you wanted to steal funds under that scenario, you'd have to hack Micah's system, you'd have to do a social engineering hack on the user itself at minimum, or you'd have to essentially hack the cold storage facility for the backup key. So either way, you've raised the bar as far as what is feasible and what is likely.
And frankly, I would argue that this is a better system than our current banking system, where you have a single point of failure, which is the bank. So.
Okay, so I won't go there. It's okay. It's enough. So regulation and compliance is worth doing a whole level. So we're going to work on that. So I don't want you to spend too much time on compliance. But you all have Bitcoin companies, Bitcoin-related companies. Where is it the best to start a Bitcoin company around the world today? Because you went through the process, you had to find a home for your company. So where is it more, maybe not friendly, but where you feel it's the best today in the world, around the world?
But from a compliance perspective or market?
Business, compliance is part of it, but it's not just that, because it's a moving target still. So.
But I mean, the U.S. is tough, right? I mean, the U.S. we've got 48 states that require money transmitter licenses still. Europe is covered by a treaty, the Payment Services Directive, which I think 30 member countries have signed on to. So if you get one license in a European Union country, you can passport it to other countries. The problem is they're not processing applications for digital currency companies. Digital currency doesn't fit into the definition of e-money, with the exception of Luxembourg. Okay, so we and a few other companies have actually applied for payment institution licenses under PSD in Luxembourg because they've basically taken a leap of faith that you know, the statutory authority granted to them under this PSD treaty, blah, blah, blah. It covers fiat currency and also covers as an ancillary jurisdictional, you know, ambit of scope, the virtual currency into which the physical currency is being converted back and forth. So Europe is coming along, I gotta say. I mean, it's the second biggest online market. I mean, the US is still the biggest. China's tough. The PBOC issued something in December 2013 that frankly was a direct correlation to the crash in the price of the currency from like 1,200 to kind of where it is now. Although I saw a Goldman report that 80% of the Bitcoin trading is still happening in China. So, question how that happened. Right? So, you know, I mean, I'm interested in anyone has some theories on that because I'm trying to figure that out.
Bots.
Yeah,
Say
exactly.
again?
Bots.
We don't know how much of that is legitimate, but
Right?
There's a few theories behind that. Partially exactly what Micah said, potentially bots. But also if you look carefully at least at what people interpreted as that PBOC ruling, a lot of what it said was that you couldn't use the currency for actual commerce. So you couldn't buy and sell goods and services with it. But owning it and owning it for speculative purposes and trading it on exchanges was entirely legal. Now, they made it very, very difficult. Getting your money into and out of an exchange was super challenging, and a lot of the exchanges had to find circumventing measures such as being able to buy cards that give you credits with different exchanges. But people, when they have a need, they will find a way. And people in China will find a way. They're very resourceful, I'll say that much. And so they want to be able to trade this currency. They want to be able to speculate on it. And I've actually heard that there is actually some commerce happening in China. We're seeing some merchants come on board. And you know, from what I hear about a lot of the regulatory environment in China is that it's very murky. So sometimes you'll just kind of dip your toe and see what happens.
See what happens.
Exactly. They don't make hard, fast rules. But the closest to being a hard, fast rule was that there was no commerce, but trading was completely fine.
What about South America, Johnny? You guys got business there.
Yeah, although we don't, the Argentinian office that we have, we don't say that that's like a headquarters, mostly because the regulatory environment down there is just as difficult. And it's more bureaucratic, if anything, and very paper-based and sort of backwards. The thing that I'll say is that one of the reasons why we just recently moved our global headquarters from Hong Kong to Switzerland was because we were having a much easier time with retaining bank accounts in Switzerland. And I think especially for startups, that drives a lot of the inquiry because in the US it's extremely hard to get a bank account if you're a Bitcoin company. I'm not sure how it is and how you guys, what your luck's been like in Northern Ireland, but I looked in Ireland. Luxembourg was also very friendly. They invited us and then introduced us to numerous banks that were all happy to give us accounts. But various other places in Europe weren't that friendly. Singapore at the time when I was looking wasn't that great, but Itbit has been able to get over there. But that's sort of what leads the inquiry is where can we actually get an operational account to run the business.
That's a good point, Dan. I think the regulatory and banking considerations are hand in glove. I mean, because think about it, banks are really animals of regulatory creation, right? I mean, banks aren't going to do anything without regulatory kind of approval, or at least, you know.
And that was my next question. Is, you're all in the US, so how do the banks can't touch Bitcoin in the US today?
Yeah.
As far as I know, maybe I'm wrong. So how do you work with these banks being in the US? You have to pay people, you have to buy things, so is there a separation between
I think the thing to ask is, what kind of a Bitcoin company are you in the first place? That makes a huge, huge difference on how interested banks are in working with you and how much risk they're taking on. So our company isn't a custodial company. We hold no money for people. We're simply a software play. In that sense, we've had no issue gaining a bank account. We actually have another bank that wants to offer us a bank account of all things. It seems unheard of in the Bitcoin space. Just saying, hey, when are you going to open an account with us? So that's not an issue for us. And I think the closer you stick to that model, the less trouble you're going to have. But unfortunately, we do need the on-ramps, we need the off-ramps. People need to be able to get money in and out. And so we do need the exchanges, we do need the payment processors. And luckily, we leave it to them to do some of that difficult challenge. And that's why we have some different companies in the space. And they expend energy into doing that. We expend energy into delivering a consumer experience. So that's a big question that very much differs from company to company. With respect to, yes, we're all here in the US. That is where a lot of the volume is, it's where a lot of the traction is, it's where a lot of the merchant adoption is, and there are some favorable jurisdictions here in the US. Texas passed incredibly favorable jurisdiction for any company obviously that isn't holding Bitcoin, it's just a software play, doesn't have to have any regulation. And even companies that buy and sell in a brokerage model don't have to have any specific license. To the best of my knowledge, please correct me if I'm wrong because I'm not an expert at this. So you don't need a license. If you are buying and selling Bitcoin from other people out of your own liquidity as a company, that is huge, and that's just the perfect example of what we'd like other states to see. Now, once you're holding and having custodial access of either Bitcoin or cash dollars, then you start running into higher and higher levels of regulatory burden and more legal burden. So that's what we've noticed.
Yeah, so I'm happy to provide the other side of that because there's the pure technology play, which again, it comes under less scrutiny. But we are a custodian, and we also have an on-ramp and an off-ramp into the ecosystem. So we're, an MSB. We have money transmitter licenses. We've spent millions of dollars, frankly, on our compliance infrastructure. And essentially, to get bank accounts, back to what you were asking, we've had to sit down with our U.S. banking partners for months at a time and give them basically direct API access, and so that they can see our systems and that our compliance team is actually complying with U.S. law and state-by-state law as well. It's an extremely rigorous process, and I think each of the Coinbases, Circles, Zappos, and anyone else who's hosting has had to go through pretty much the same thing.
So you still have money left after all this?
I hope so.
Yeah, we've had the same experience, and I got to say, you asked why we're in the U.S. Because Silicon Valley is that way.
Yeah.
Right. But I mean, our legal entities likely are not in the U.S. Right. Our parent companies are likely in other jurisdictions outside the U.S. Okay. But we've got banking reach all over Asia, all over Europe, all over the U.S. And that was something we started on day one working on. And it's definitely a seven-figure issue. I mean, and it becomes a barrier to entry. The twisted part of it is once you're on the other side of it, unfortunately, the motivation starts to decrease to try to change it, right? Because you've had that sunk cost, and now it's a competitive advantage. We got the bank accounts, and that was a significant compliance and regulatory investment to get to that point.
Yeah, so that is a major problem with the regulation, is that people tend to pull the ladder up after they've climbed up to the top. So you have what regulation ends up doing is it just consolidates the players and on ramps and off ramps, and then makes it less competitive. And we lose our capitalism. So it's a problem. In terms of the banking relationships, I mean, we didn't have any problem getting a bank because we didn't do exchange. So if you do exchange, then you're just basically opening up a whole regulatory can of worms.
Yeah. Okay. So Paul mentioned that Texas was one of the best states in the US. Do you agree also?
Well, I mean, so this is the other thing. There are now two baskets of regulations. There's the traditional MTL, the money transmission licenses, and now with the start of the BIT license in New York, there's a second component that's going to apply to virtual currencies. There's a bill being argued right now in Sacramento to apply it to California. New Jersey's gotten into it. One of the Carolinas has gotten into it. So we're now going to have to comply not just with the traditional MTL licenses and the federal level money service business, the MSB license that you get from FinCEN, but we're also going to have to apply and obtain so-called BIT licenses, okay, from these other states. Now, Texas came out right up front and said, hey, come to Texas. If you're in certain areas of the virtual currency business, you don't need anything. You don't need any of this stuff. And one of the Carolinas said the same thing. I think it's South Carolina. But I think it's funny, the dynamic between New Jersey and New York, right? Always throwing rocks across the Hudson. New Jersey is now trying to have the antithesis of the BIT license, right? To fix all the issues. To set up in Hoboken, to hell with Manhattan, right? Come here. So we'll see. There's going to definitely be a state by state, but that's a patchwork quilt of and now it's going to be duplicated for companies in our business. And then, we're all like, God, why isn't there some kind of federal preemption? I mean, this is interstate commerce, and, why, who's going to help us with this, right? But to Micah's point, you invest in it, you deal with it, it's a cost of doing business, and then you kind of pull the ladder up and look at other markets. Yeah.
Yeah, and even though Texas might be a little easier, there are some of these other jurisdictions that are easier. We still have FinCEN, so we have various reporting thresholds and things that we need to comply with in order to keep that MSP license. And now each state is saying, hey, we're going to impose different ones. Like the BIT license is completely different as far as what the ongoing reporting thresholds and requirements look like, some of which are almost impossible to comply with. So we have compliance departments all around the Bitcoin space saying, how are we even going to survive here? So we already have companies saying, okay, we have to start IP blocking New York, which isn't a good outcome. So even if you were in Texas and you have one New York customer, you're potentially subject to the BIT license.
And by the way, that's the exact opposite of what they were trying to achieve.
Yeah.
They did not set the regulations in New York because they wanted to punish Bitcoin companies. They set the regulations in New York because they wanted to encourage Bitcoin companies to come to New York. They wanted it to be the Bitcoin center of the world. And you see what happens when they do these kinds of things. They basically cause us to IP block them.
And that's
Totally
happening.
opposite result.
Coinbase has IP blocked the state of Wyoming.
That's right.
So it's already happening.
So if you're interested, you can download the BIT license, the last version, from the event page of the website. And you can also browse it if you don't want to download it. It's a PDF file. So I would like to move on to another front, which is the image of Bitcoin. You know, I think it's you, John, who said, did you hear anything negative about Bitcoin? I think everybody had, and it's pretty significant. And we're still on our side, on the payment side, and, so we can learn and see how it's improving. But as consumers, do you think that the damage can be repaired? And what will it take in the future to bring back Bitcoin as a really legitimate currency used by consumers and worldwide?
I'll start sort of high level, and I'll let the other guys jump in. But I think Gox was very much sort of the death throes of the Bitcoin 1.0 generation. This is when Bitcoin was getting massively popular through media, but you still didn't have infrastructure that supported the amount of popularity, and so people took advantage of that. From Gox, we've had companies like Coinbase, Circle, numerous companies that have come out of it that have been funded by world-class investors with actual financial services experience. You have teams that are made up of folks that have been in financial services since way back when. Zappo in particular, we brought in Dee Hock, the founder of Visa, Larry Summers, Secretary of the Treasury, and John Reed from Citi on our advisory board to help us get through some of this stuff and think about these issues. You have attention to security that we discussed earlier, and you have just a general professionalization of the industry, which is, I think, the what we're getting to, and hopefully going to help on the consumer side as well. I don't know if from an image perspective we've gotten there, but when you see an announcement that Goldman is investing in Circle, that's a great thing. Or BBVA is investing in, and NICE is investing in Coinbase. And everyone on Wall Street now wants to adopt blockchain technology. So those are all good facts.
So I judge it by the events that I go to, and when I first went to the first Bitcoin event, I mean, there was a guy that was wearing a Bitcoin T-shirt and a pink tutu, and and now you look at this room, right? I've never seen something. I see more people with suits on at events that I go to than I've ever seen in my life, and there is a total shift in the mentality and the understanding of Bitcoin that I have seen, and the people that we talk to now are major financial institutions around the world that move trillions of dollars around the world. These guys were not talking about Bitcoin 2 years ago, and now they are. Not only are they talking about it, but they have high-level directives from the very top of their organization that they need to adopt this technology. So this is a total shift, and I think the world is already changing. Most people don't know about it. The media doesn't know about it. You don't read much about it anymore because it's kind of died down. But the real movers and shakers of the world are adopting this in a big way, and the world is changing without anybody even noticing.
Paul, you want to add something on this?
Something about the aspect of the impression of Bitcoin, especially early on when we had the Goxes. I think one thing to consider is a lot of people's impression of anything, Bitcoin, sports, you name it, is based on the media. And if you talk to any writer, anyone in the media, they write about what's spectacular and what makes headlines. And so talking about someone in Bitcoin getting busted, getting arrested, doing $1 million of money laundering potentially or possibly makes huge headlines versus some of the actual potentially larger crimes that are going around in the world that are much more hidden. And abstracted from society. So a lot of the negative press, in the grand scheme of things, if you look at it in the grand scheme, are very small, minor events in the global economy, but make for great headlines. And so that has created part of what was the negative impression of Bitcoin, in addition to Mt. Gox. And even Mt. Gox going under was a huge splash in the few hundreds of millions of dollars, although potentially 10 times that could be lost per year by other financial institutions. So media is a huge effect, and I think getting, just like Micah said, having media cover more of the larger scale investments, I'm sorry, not Micah, but having these larger scale investments come in, they're not as spectacular, but they're getting a little bit of coverage, and that is helping. Whether or not that big, spectacular, positive event really happens is yet to be seen. But unfortunately, if you notice, every time you turn on the evening news, what's 90% of what you see? It's always negative. And so that's what people want to highlight, and that's going to be the uphill battle that Bitcoin will have, is that we'll have to take those 10% positives and really show people what the technology can do to really change the world.
So I would like to move to the next chapter, which is about security and standardization. So I understand that you're all very familiar with security and so on, but how, after the Mt. Gox and so on, the industry or the ecosystem, I would say more than the industry today, is getting together to define the rules that will apply to any entity managing or touching Bitcoin around the world. Because you just need one exchange, which is a kind of roadmap to route everything. So how, as an industry, do you see that happening, and what's the best practice?
Yeah, sure. Yeah. So two things pop out at me. One, well, there's a general elevation of security knowledge in light of the major attacks that happened. So people pay attention to it more. So there is that. But then there's also specialization. So now, you know, when Bitcoin first started, you would build the entire stack yourself because there was no stack to build on. So every time you wanted to create a new service or whatever, you'd have to start from the ground, build all your tools, build on top of those tools, and then you'd have a full stack solution to do exchange or to do some service, right? And now what we have is we have high levels of specialization in the industry. You've got BitGo, you've got us, you know, like who are doing certain layers, and and you can build on top of that. So now you have much better skill sets that are really directed towards those problems like security. That's one thing. And then the third part is standards. So one thing that's been kind of missing from the industry is a set of standards by which we can all sort of agree on as an industry of what is good security versus not. And so there's several companies in the space who kind of focus on this problem, who have kind of gotten together, and there's a guy named Michael Perklin who started it's called C4, I can't remember what the acronym is, Cryptocurrency something consortium. And then there's a standard that is emerging from that group. It's an open source standard, so anybody can read it, contribute to it, and I don't know what I can talk about there, but there's some pretty big organizations that are really interested in participating in this.
And do you see organizations which are, you know, already involved in the payment industry for the good or bad, like PCI, or do you see them involved in this kind of activity as well, or today they are pretty much saying we don't want to touch it?
Let me put it this way: the companies that are doing the audits for PCI and stuff are very interested in also doing this for the Bitcoin industry. But this is a standard that would sit on top of the existing standards. So we're not trying to redefine all security. We're saying, hey, you should follow this ISO, and then in addition, if you're doing, you know, Bitcoin, you should also do these things. And it's very specific to our industry.
I think the whole idea, though, is as we are maturing as an industry, everyone talks about security. The first slide on my deck was security. That's crazy. Imagine going to a bank and the first thing they pitch to you is, we're the most secure place to store your money. You would question that. So as we're maturing as a technology, we need to get away from that. It just needs to be taken as given that your money's going to be where it is as long as you do what you're supposed to.
And that's where the standards is important, because how do you compare one company versus another as a consumer? You have no idea. Everybody says we're the most secure. We use, you know, military-grade encryption, right? You'll see that on every website you go to, and that means nothing. So we all use military-grade encryption because it's just the standard of encryption that everybody uses. Anyway, but by having a standard and actually having independent audits and having other people look at your systems and evaluate them and then grade them. Now, if you build that kind of system, you can go to a website and they get a certification that says that we're a level 3 secure platform. You're going to feel a lot more confident as a consumer to put your money with them, and so that's really important.
One thing I want to promote, which is probably new to a lot of people in this audience, or at least the value of this, is some of our most secure systems in the world are actually open source systems. So these are systems that can be openly audited by a lot of developers. And the more people that are actually using those systems and those platforms, the more it gets seen, the more it gets audited, the more issues with any aspects of security or stability get found and fixed. And so that is a key component. And a lot of systems rely on open source. Some of them are completely, and some are more partially. So there's that aspect. It's still a difficult challenge for the consumer to judge that. You can't go peek underneath the hood and say, oh great, this has been well audited, this has not been well audited. And so that's the kind of thing where the standards bodies start to come in, and how well audited the code base is, whether it's open or closed, really does come into play. I'm excited about the C4 initiative and trying to establish some standards. One of the first things that I noticed in coming across some of those standards is that when it comes to security, especially in the space and that will be implemented, is that it isn't a linear scale. It isn't, this is less secure, this is more, this is more, this is more, and this is more. It's actually more of a fan and tree in that you can actually compromise one aspect of security by increasing another. It all depends on your attack vector. What do you fear? Do you fear someone getting access to your device? Do you fear someone getting access to the provider? Do you fear someone guessing your password? What do you fear, and what is the attack vector? And so this is part of what's such a huge challenge, and what I'm realizing makes it difficult to say within that C4 document that I had looked through, what is level 1, 2, 3, and 4? Because I would personally disagree with one level, but agree with another. And we're just going to have to hash it out and realize that there might be some areas where there's some gray area. But overall, I think the existence of some of these standards will just improve the entire ecosystem as a whole.
That's why it's an open source standard, so anybody can contribute.
But it's money, so you never know how it can be tweaked on one particular exchange or platform. So, yeah. But next question is about, we don't really know how all this started. There was the name of a guy, a journalist found in California, it wasn't him, and so on. But who owns Bitcoins today? That what I mean by owning, it's the top 80% of the Bitcoin volume. Who owns that? Do you know?
I think the part of Bitcoin that makes it fairly popular, and the reason why there's so many people here even interested in listening to it, is because it has this aspect of pseudo-anonymity. And it's really hard to say who really owns. I'm not sure how much insight you guys might have. I can chime in on this. But it's hard to say who actually owns the Bitcoin itself. And as far as where it came from, right, there is some amount of speculation that the original developer, Satoshi Nakamoto, owns a fairly large portion of Bitcoin that, from what we can tell, has not moved. And basically stayed in the same place.
A public general ledger. So all the transactions are public. So if anybody tried to trace them to see a little bit if there was concentration of these Bitcoins somewhere.
Absolutely. Actually, we just had a meetup from my hometown in San Diego last night, and one of the co-founders of Coinalytics was there giving a description of their project, Jarvis, and it has a tremendous amount of power in traversing transactions, the blockchain, looking at which addresses could possibly be associated with each other. But with respect to Bitcoin and its possible privacy, its potential privacy, and the ability to de-anonymize it, it's kind of a cat and mouse game. The technology gets better at obfuscating transactions, obfuscating the trails, as the technology also gets better at being able to find it. So in the end, it's going to be hard to 100% prove any aspect of true ownership of all funds of that someone has. But you're right, it is out there in a public ledger, but there's no outward association between addresses, transactions, and any specific people. It requires a next level to associate those addresses.
That's right.
Well, there was a survey that CoinDesk just published the results of, which I meant to look through this morning. Anybody do that? Just came out. All right, we can move on. I'll check my iPhone, but it was an opt-in survey, right? It wasn't based on kind of the big data parsing that Coinalytics was doing. It was how scientifically performed it was. I have no idea. I think something like 4,000 participants. But that just came out today, so there is some data okay, on a self-reporting basis on who wants Bitcoin.
So we try to get access to that and publish it.
Yeah,
so
I'll take a peek right now.
Yes?
So on the similar lines, what I'm curious to learn is what are the use cases where consumers, especially in the US, are using Bitcoins? Because if we do a poll in the room, except for trying out Bitcoins and wallets, I don't think on a day-to-day basis there's a need to use Bitcoin.
Let's actually do a poll in the room, first of all. Yeah. How many people here actually have Bitcoin?
Can you repeat the question, the folks in the back couldn't hear?
How many people
have Bitcoin?
Own any Bitcoin?
Yeah.
And how many use it?
Yeah, how many people have used it for a real purchase?
Maybe less.
And the regular payment methods, you wouldn't have been able to use the regular payment methods when you use the Bitcoin?
I'll just repeat the question for the people in the back. She's basically saying, what is the primary use case for a consumer in the United States? I guess I would argue that there probably isn't one right now. You know, honestly, if we're just going to be really honest, Bitcoin is actually way harder to spend in the United States than credit cards. It is not beating credit cards by any means as a payment mechanism in the United States. That said, there's 193 other currencies around the world where Bitcoin could actually be a major competitor. And there's a lot of places where we don't have the same level of built-in infrastructure that the United States has. So, you know, if you think about what happened in Africa with, jumping from, in the United States we went from PCs to like big mainframes, PCs to mobile phones, and now we do a lot of mobile phone computing. Well, in Africa, they just kind of skipped that whole thing because they didn't have this built-in infrastructure, so they skipped straight over to mobile technology rather than doing like wired connections. In the same way, they're also doing the same thing with payments. And so, like for instance in Kenya, one of the more popular ways to buy things is through a virtual currency, which is M-Pesa, which is basically mobile phone minutes. People are trading around mobile phone minutes. So they're very used to alternative currencies already. They're very used to mobile payments. So if you're in Africa, and you don't, like most of them don't even have a bank account, so and the bank account process is really slow. So if you're comparing the two systems, right? Does Bitcoin make more sense, or does the legacy old banking infrastructure in Africa make more sense? I think Bitcoin makes more sense. And so you're going to see a lot of countries around the world where that becomes the sort of dominant currency, and then it will filter its way up around the world as you now, as a business, can now say, wow, all these people around the world have Bitcoin. I have a ready market of people who can buy my products that I never had before. I can start shipping to Africa. I can start shipping to South America in places that I never did before. And you're seeing this already, right?
Yeah. And I've got some real-life data points, excuse me, in addition to some of the CoinDesk stats, which I can repeat. But I think it's going to probably start with remittance channels, okay? Expats sending money back, because that's a great use case for Bitcoin now, is avoiding the sort of 8 to 10 to 12%, Western Union charge to send money back to your friends and family, in the Philippines or in Africa, or wherever you may have come from. Messaging apps, it looks like, are taking the place of sort of traditional, financial services like a Western Union, WeChat, Viber, some of these messaging apps that count hundreds of millions of subscribers. Okay, so there are a couple of factors. One is not just the mobile revolution, right, which is 6 billion people now have a mobile phone, but not a bank account, and so clearly not a credit card. But the smartphone revolution, okay? 600 million smartphones were acquired last year in 12 months. And so any kind of app-based service, okay, and keep in mind, Bitcoin is an IP protocol. It can easily be integrated into anything that talks IP, like a messaging app. So all these apps are now enabling consumers, anyone, to send and receive Bitcoin. Now it begs the question of how they exchange the fiat currency, okay, for that Bitcoin. But that's also a very well-known process. Most mobile phones are prepaid outside the U.S., so there's a very extensive infrastructure for doing just that, handing a fistful of your local currency to upload into mobile minutes. M-Pesa is a great example of that. The problem with M-Pesa is it's stuck to one mobile network operator, Safaricom, subsidiary of Vodafone. It's only going to work in Kenya. Okay, so Bitcoin will work anywhere there's the internet, right? So you start to add that up. Hundreds of millions of messaging apps, billions of people with mobile phones but no bank accounts. Remittance corridors, sending money back to the Philippines, back to Indonesia.
So I follow you. So in terms of volume of transaction, where are we today, and what is the trend? Just do you have numbers that we can understand a bit the scope of the phenomenon?
Yeah, we're at about 125,000 transactions per day on the Bitcoin network, but there's a large part of that which is actually just sort of trading Bitcoins back and forth.
Right.
So it's hard to say what is actually a consumer transaction or something like that. It's probably a very small subset of that.
Okay. And in terms of volume of Bitcoins, not just the number of transactions, but the number of Bitcoins, do you have any idea?
Yes.
Yeah.
That's actually almost impossible to tell unless you actually are in control of someone's Bitcoin. So if you're a provider that controls the Bitcoins, you can see the actual volume getting sent out. But the Bitcoin protocol makes it such that an address, or what we call, this gets a little bit technical, but you need to spend an entire block of Bitcoins, even if you're only going to send a fraction of it to somebody else. So if my wallet had 100 Bitcoins and I wanted to send one of it, there's the potential that on the network you see an entire 100 Bitcoins leave, but only one of them went to the destination. So on a technical level, we can make assumptions, but wallet technology has made it actually harder for us to determine the actual true volume of Bitcoins being transmitted, because an amount of that is going to a destination, but an amount of that is actually returning back to the user. So once again, unless we talk volume that's going to merchant processors, such as BitNet and BitNet and custodial accounts, the true actual blockchain transactions are a bit of a challenge to determine.
Yeah. So some of you are focusing on the retail side. So it's a little bit a chicken and egg problem. You have to create an infrastructure for consumers to get access to it and use it. And on the other side, where can I pay when I'm a consumer? So what's your experience and feedback from retailers, not just in the US, but also worldwide, outside of the remittance, which is another business? What's the feedback today, and how does it start? How do you make a retailer accept the new payment system?
You're the right guy for that one.
Yeah, I'll take that one. Yeah, I mean, and that's what we are hyper focused on, the acceptance side of the equation. I mean, we're relying really like on the Zappos and other kind of consumer facing folks to figure out how to get the Bitcoin right into consumers' hands. From the merchant perspective, the benefits are compelling. It's cash, right? Nothing's better than digital cash, right? No chargebacks, no cost of PCI compliance, a lot of the overhead that's associated with accepting other payment types, not just cards. But the merchants have lots of other payment types to integrate. Okay, Apple Pay, Alipay, whatever Google's up to, right?
You're in competition with a
lot of competition. So I mean, the merchants, they got limited resources, so they are going to prioritize and allocate those resources to the payment types that consumers are using, right? And so that feeds back to Daniel's last questions: where are the consumers? And so, but from that perspective, I think that there has been a sea change over the last 12 months in the merchant attitude. There was a lot of subjective resistance, like the reputational risk, and do we want to touch this because of all the bad news about Bitcoin? They've gotten over that, and now it's all about we're going to do it. We know it's just a matter of when, not if. Okay, and the benefits are compelling, sufficiently compelling that it's on the roadmap. Okay, and it might not be next 6 months or the 12 months, but it's on their sort of 12 to 18 month roadmap. And I think that and that's our job. That's BitNet and Coinbase and BitPay and other kind of merchant-focused processors to wire up and give consumers a place to spend the Bitcoin.
So we did an event last year. So next year in June, we'll have more merchants equipped with Bitcoin acceptance system and so on.
Yeah, I mean, we're already seeing crazy growth on merchant adoption. So a year prior, it was a fraction of what it is today. So,
right.
And the sizes of the companies that are coming in are also much larger as well. You got guys like Overstock.
Yeah, they've been for a while.
Well, okay, Overstock was one of the first, but there are a lot of other really large.
Japanese company called Rakuten, our biggest customer. They're like the 5th biggest e-commerce company in the world, and we're spending most of our next 12 months wiring up all their properties. And it's not just e-commerce. They own messaging apps, they own video on demand services, right? And they're all going to take Bitcoin. At this point next year, all of Rakuten, $30 billion in gross sales, okay, they'll accept Bitcoin.
Okay. Paul, do you want
Yeah, one trend that I noticed is that a lot of brick and mortar merchants are struggling to accept Bitcoin. A lot of people say it's a no-brainer. There's no chargebacks, there's no fees. It's pretty much digital cash. But the challenge is that there's an overhead in training because it's a new payment method and staff aren't accustomed to how to accept it. And no matter how simple it might be, if you don't do something over and over and over again, you'll forget how to do it. I used to work in small business and I can attest to that. And I guarantee if staff didn't know how to charge a credit card, they'd never seen one, they wouldn't be able to do it. They'd have to go ask the manager, look in the book and whatnot. So I think the key to driving merchant adoption and make it seamless, and I know several merchants that have said no to accepting Bitcoin for this single reason, is tight integration with point of sale systems. And so this is where I'm really trying to lean on the BitNets of the world, the Coinbases and the BitPays to really work that aspect of the business development. And once it comes to the point where the staff doesn't even know that you're paying with Bitcoin, and I've seen that with payment types such as Apple Pay and Google Wallet, where I go touch my phone, and like, what are you doing? I just paid. And Bitcoin can be just as easy as that, if not easier.
Sure.
And so it's really just get that integration in place, and it can be seamless, and the merchant doesn't have to deal with that extra effort, which they have to today. And merchants have fallen off because of this. I went to go to a tea shop today here in San Francisco, which was taking Bitcoin, and I found out that they're no longer taking Bitcoin. And that was a reason. It's like, oh, there's this tablet, we had to put it aside and train people how to use it and deal with the accounting. So this is going to get better, and this is what I predict will help the brick and mortar aspect. Now, the reason why I think we've seen a lot of e-commerce adoption, like we were mentioning Dell, Microsoft Online, or Rakuten, is because once you build it and you put it onto the website, I'm not going to say you're done, but you're not incurring that recurring training aspect on an individual employee case-by-case basis. So e-commerce is driving us first because it's global. It allows you to reach the world with your service and your business, and then brick and mortar will, I think, follow as the technology starts to mature.
And also, Apple Pay only works on Apple devices, and Bitcoin works on every device.
So I would like, when we talk Bitcoin, we talk payment. When we talk payment, we talk user experience. Can you drill down a little bit and explain what is the user experience today when you make a payment? Is it because I've seen several applications, wallets, and so on. It's not that easy. So, or it wasn't that easy. So, where are we now on that front?
I can probably speak on that because, well, we're a wallet provider, so our app allows you to pay people or merchants with Bitcoin. And I think the biggest thing is that it's unfamiliar. Because a lot of people are accustomed to, especially in the US, I'm going to speak primarily here in the US, a lot of people are used to a pull system, where here's my information, go take the amount of money, hopefully, that I let you. If I want a $5 coffee, I hope you pull $5 out, and here's my entire account information for you to do that, such as via credit card. With Bitcoin, it's a push system, so it's not good enough for me to show you a number the way I would if I swiped a card, or have you scan a barcode on my gift card, which is what a lot of us are accustomed to. Instead, you need to send money, which means scanning a merchant's piece of information. And that's an unfamiliar process. People aren't used to scanning QR codes. They're ugly, they're intimidating looking, but that's 99% of Bitcoin in-person transactions, is looking at this ugly barcode, scanning it, and then sending money to it. In the end, it actually isn't that complex, but it's different. And it's something that devices weren't necessarily built to do from the get-go. There's glare, bright lights, trouble scanning. Cameras were only built for this, low resolution cameras. And that's where we're running to some of these kind of intimidating, unfamiliar usage cases. But there is technology that's going to make this simple. Apple finally incorporated NFC into their phones for Apple Pay because they realize that that is a great method of payment using mobile devices. And Android has had this already for years. And we will for sure be driving NFC payments as soon as we can, once again, like I mentioned before, integrate payments into currently existing point of sales. Right now, using that tablet to take payment doesn't make taking payment over NFC very feasible. When it's integrated into that check stand terminal at your Whole Foods that you just simply tap, then it's going to be just as seamless and probably easier than it would be to pay with your credit card. And so it's coming. We just need a lot of parties to synchronize, meaning the wallet providers, the payment processors, the point of sale hardware developers, and the merchants to say yes. And once that all comes together, I think we'll have a tidal wave of a lot of merchants accepting it. But to add to that, one key thing is it's not just that isn't enough. You need to give consumers a reason to use it. And merchants have every reason when it's integrated and simple, so they've got to pass that incentive over to the consumers through savings. They save 3-4%, potentially the cost of counting cash. I used to work at a bar or restaurant and had to bike $20,000–$30,000 on a Monday afternoon to the bank after a busy weekend. And I said to myself, I'd happily pay 4% credit card charges to not have to do this. So people think cash is free. It's not free at all. Sure. And once those incentives start propagating, I think we're going to see some better adoption and consumers more willing to use it. But for all of you today that have barely used Bitcoin, there already are incentives. There are companies out there that are realizing there's ways to utilize Bitcoin to pass the savings along, especially in the gift card space. So the company Gift, GYFT, eGifter, they provide gift cards to hundreds of different merchants around the country, and all of their gift cards are 3% off if you purchase with Bitcoin, and only if you purchase with Bitcoin. In addition, there's another company, Fold, that just got accelerated out of Boost VC, and they offer 20% off Starbucks gift cards instantly. It takes you 30 seconds to buy a Starbucks gift card at 20% off. I can do it while in line and pay for a coffee. Not that I like going to Starbucks, but if I'm gonna go to Starbucks, at least I'm gonna use Fold. And another service called Purse.io lets you get anywhere from 8 to 25% off on your Amazon purchases. There's a little bit of extra friction there, but once again, either you're lazy and push Amazon one click to buy, or you potentially get 8 to 25% and go through a few extra steps. All of that is going to get streamlined, made easier in the future, but there are real usage cases for it today, and I definitely use all of these services.
There's also, so building on the face-to-face, Paul's right, it is getting a lot better. If you go back to just a couple of years ago, it was a lot harder for me to even give you a Bitcoin like face-to-face. There are great use cases that involve the user not even knowing they're using Bitcoin. So using the Bitcoin payment rail that powers an app that works really great because it uses Bitcoin. It's not awesome to use just because it's Bitcoin, but it actually works a lot better. So a really good example of that is Abra, which released I think a few months ago on their Go Live. But they're a remittance app that pretty much lets you send money anywhere in the world. If you go on their site, it doesn't say anything about Bitcoin. It just works really well, and it's really easy to use and nicely designed. So I think there are numerous use cases in the consumer, in e-commerce and in the digital space where potentially you don't even have to tell your consumer that they're using Bitcoin, but they are, and it just makes the service itself run much better.
Well, and that Abra app is fascinating because there's like this Uber element to it, right? You can be a sender or a receiver, and basically go find somebody, okay, and have their photo and their stars and their rankings and the whole like Yelp rating system kind of thing, and actually that's a great way to, in some of these markets, to exchange your fistful of local currency for Bitcoin, right? And then send it to your loved one half the globe away, right? Where then they're going to have the Bitcoin, right? And there are ATMs proliferating. A lot of predominantly Asia. Right, they're again going to some of the regulatory considerations in the U.S. and Europe. In South Korea, they're like 7,500 Bitcoin ATMs. Right, in Manila alone, they're like 500 in one city. Why? Because people are sending Bitcoin back to those countries, and then they're taking out Philippine pesos, but they're leaving the balance on the blockchain. That's their savings. That's their stored value. That's their bank.
So all these are great applications and so on, but you're insiders. So how do people outside of your world can get access to all these type of applications and understand a little bit better? What are the good resources for outsiders to learn more about it after this event, of course?
There's some various websites out there that have a lot of information on there. There's one called weusecoins.com, bitcoin.org provides some information. A lot of the news media sites such as CoinDesk will get you up to date with the current events. CoinDesk, Cointelegraph, and gosh, I mean, there's Google. You search and you're going to find a ton. And so the choice of options of how to use Bitcoin, how to get Bitcoin, where to use it has almost exploded from the point in time that I entered the space. So it's definitely out there. One thing that I encourage, if you have the time, is the meetup groups are a tremendous resource. They were a huge resource for me. It's actually how I built most of our co-founders. Almost all our co-founders in our company were built through the ecosystem of people passionate about Bitcoin and wanting to build out the system. So meetup groups are all over the world. I think there's over 350 to 400 meetup groups in various major cities around the world. And people can come together once a month, maybe have a guest speaker that talks about a specific topic, maybe trade, buy, sell Bitcoin, show people how to set up a wallet, and really connect with what the ecosystem is about. So for people that really want to learn further on a more one-to-one level, and not on a digital level staring at a screen, but with actual people that are passionate about the space, Now look it up, meetup.com, type in Bitcoin. You're going to find a ton available in most cities.
If you're ever in LA, you can come to ours. And there's actually a bunch that run regularly in San Francisco and Silicon Valley.
Yep.
So they're very often actually.
So in our,
I wanted to just answer really quickly. The best way to get started with Bitcoin is actually to acquire and send your first Bitcoin, because once you've gone through that process, you will have a really deep understanding of how it works, and you also realize how simple it was. You know, a lot of people build up this complexity in their head about the technology, but it's actually pretty simple when you actually just go download a wallet and buy Bitcoin and send it to somebody.
So download a wallet, download Qt, start a full node.
Actually,
I don't recommend
Don't start mining.
that approach.
on that note, we actually have hopefully just about enough gift cards for everybody in this room. If anyone would like to set up a wallet that doesn't already have a Bitcoin wallet today, Airbitz is giving out 15 millibit for all the new accounts. We've got gift cards. You can take it home, do it later. At least give you a week, otherwise we're going to take the money back. Just kidding. But yeah, definitely come see me. Our COO at the back of the room, Rick Chan, in the pink, he can help out as well. And we'll help you get set up. You know, if you have an Android or iPhone, great. Windows Phone, I'm sorry, there might be something else out there for you that we can help you out with. Apologize. But let's get everyone with some Bitcoin before you guys leave the building today, and then you send it to each other. All right, actually feel it, use it, find its stumbling blocks. It's not perfect, and that's actually one of the things that we're always looking for is how can we improve the ecosystem, our own app itself, and hopefully open people's minds at how this could be used.
so thanks Paul for the free Bitcoins. One misconception was that, and we highlighted that in our call, preparation call, was I always thought that for micropayments, Bitcoin was the solution, and you told me otherwise. So can you elaborate on that?
Sure.
Yeah, in volume, it's going to clog the blockchain, right? But Mike, we're talking about Lightning.
Yeah. So, one of the things I love about the Bitcoin industry is we build some cool technology, we run into a problem, then we solve that problem by building more cool technology, right? And it's this virtuous cycle, and that also extends to regulation too. We could solve problems in a much better way, but I'm going to stick to this topic. So, micropayments. So micropayments presents a problem because the network itself is just not necessarily capable of handling millions of transactions per second, or it can't handle anywhere near the volume that the current financial system can handle. But there are solutions that are being developed for that, which are also based on these sort of trustless principles or minimal trust principles, like the Lightning Network, which essentially allows you to sort of open a trust channel between yourself and another person that you do trust. And now you're like a conduit for that trust mechanism to be able to send Bitcoins through them to somebody else. It's sort of like a relay network of money traffic going back and forth. But it does not require that you totally trust that person, because if for whatever reason they did not pay you back or they didn't complete the transaction or whatever, you can always just shut off that conduit at that moment and then publish it to the blockchain, and you wouldn't lose any money. So, and this is not something that the average person is going to do. It's going to happen underneath the hood, and all of the wallets are going to start being able to communicate in this protocol language, and money will just move fluently throughout the world, mostly through these channels, not on blockchain, but what we call off blockchain. And then every once in a while there'll be a settlement transaction that says, okay, we're going to close these channels and we're going to settle it to the blockchain. Now it goes to the permanent ledger. And so it's sort of like this hybrid world, and we can scale that. Presumably we could scale it to millions, billions of transactions a second if we wanted to. So,
and I agree. I mean, the notion that micropayments should be a killer app in the sense of taking down paywalls when you're just trying to get an article on the New York Times or Washington Post. Some stupid ad shows up that you have to click through or wait for or whatever. It's like, can I just pay 10 cents and read the article, go on with my life? Well, you can't, because that's the whole issue that with card networks, right? There's a minimum fee below which, a minimum transaction size below which it's not profitable to process that transaction, right? And Bitcoin can do that. I mean, machine-to-machine payments, the Internet of Things, okay, machines just paying each other, right, using programming and smart contracts and whatever. And Bitcoin should enable that, right? And to Mike's point, we'll solve for the side chains, right, and using smart contracts to enforce the ability. But it's, exciting thing about this is it's the invisible hand. A lot of smart people figuring this stuff out, and it's working.
Just for everyone's benefit, the smallest transaction that you can currently broadcast is about 2 cents USD. So one of the things that I showed you all that gaming stuff, how are we doing that? We don't broadcast every transaction that happens on our system. In fact, if we did, I think that would cause issues on the Bitcoin network, because we probably process about 3 times what the Bitcoin network processes on a given day because of all this gaming stuff we're doing. So you can send on our system any amount, and you have other systems like this, like ChangeTip, if you've heard of that. It's a tipping app that you can use on Reddit, Twitter, lots of stuff. Coinbase operates a very similar system. And the trade-off is trust. So you have to trust Zappo that if you're tipping with Zappo, or if you're playing a game that runs on Zappo, that we're going to have your money, which is also why we operate a full custodial system. So it's one-for-one matching, and once you do broadcast it, you have your Bitcoins in our system and they go out. But while you're in our system, you can run any amount of value through it. It can be down to a single Satoshi, which you can't do using the Bitcoin protocol right now. But we have Lightning Network and other projects that are trying to accommodate that.
Yeah, so I just want to call that out as an actual systemic risk, because you have this beautiful trustless network where we can move money around the world. We don't have to trust anybody. And then we have this need to do lots of transactions that doesn't really scale onto the network. And so the way we've solved that is essentially by doing a lot of things off-chain in your own internal ledger that you run, your Coinbase, you run your own ledger and all the transactions you're recording. And then you're making a promise to pay to an individual that, like, whenever they want their money, they can come get it. But it's basically just recreating the existing banking infrastructure on top of it.
Fractional banking.
No, okay, well, we have to trust that they're not doing fractional banking, right? And
it's in our terms.
It's in your terms, so I feel so good. I'm not knocking them, because, you know, frankly, you guys are trying to create a scalable system, and this is what we have to do right now. But the industry looks forward and says, we don't like that kind of system, so we're going to create a system that does not require that level of trust. And that is the beauty of this ecosystem. So whenever people talk about scaling issues, or Bitcoin will never work because of this or that, I say that's bullshit, because we will figure out a solution to every problem that we face.
Yeah,
and we are building on top of such a strong, solid foundation that it is worth our effort, because the existing the system that we have built solves lots of problems already, and it's just in the very, very early days. And so we are going to continue to innovate on top of it.
So Sue, you have a question?
You talk a lot about trust and
Yes.
how I might not trust you, but I can trust math. Right?
Yes.
How do I trust that your guys' math is any better than Wall Street's math and all of their exotic, derivative products and things like that?
Yeah.
Have you thought about? I don't doubt that you guys who are in the weeds and you understand it, like the math is beautiful and you can trust math. But when it then comes to this side of the table and the consumer side of the table, it's like most people don't understand math, right? So that's not a very good selling point. You talk a lot about trust. Somewhere I have to trust that you guys are coming up with this stuff and that it's going to work, right?
Yeah.
That I can trust you. So I think you can talk about it and say it's trustless because you're asking consumers to trust.
I'm actually not asking consumers to trust. So this is what I think is happening, right? So you have this system. The people who have spent the time to read the protocol, to understand the math, to know how it works,
which is not most consumers.
No. And so this is why I would make the argument that right now I'm not sure Bitcoin is a consumer technology.
Okay.
So the people who are taking a look at this are saying, okay, we understand the math, we can trust in this. On top of that system, we can now build layers and layers and layers of foundation until we build things that are totally so abstracted from Bitcoin that the consumer can actually use and touch, that they never even have to know they're using Bitcoin. But under the hood, the entire financial system has been built on top of this foundation. So the consumer does not necessarily need to be educated about how Bitcoin works. They just need to know how to use it. So for instance, do you know how the financial system works? Do you know exactly how money is created and how bonds are traded between the Federal Reserve? Does the average Joe consumer know how that system works? No. Do they know how to spend money? Absolutely, right? So the difference is we have the existing system, which is based entirely on trust from the very, very foundational level. And we have a different system here, which is not based on trust on a very foundational level. And now we can build systems on top of it. And that will benefit the world.
And you said something about math too, and luckily there aren't two versions to the math. The math is solid.
That's a good thing about math. That's absolutely true.
And math we trust, right? Well, and I also saw something that the estimate of the amount of computing power it would take to crack the encryption, okay, behind the Bitcoin algorithm, is more than the output of the sun since the Earth was created, given the current energy consumption of all the world's supercomputers. So, well, I'm just saying. I mean, there's some
My
data.
answer to that is I trust you.
Right.
I want to chime in on the fact that I think there's different aspects of trust. So when you're trusting math, you're trusting because I don't understand all of the math in cryptography myself. What I'm trusting is what the math can accomplish, other people have audited, and that's for the most part not changing. Now, when we're trusting custodial access in banks in our current financial system, what we're trusting is a day-to-day decision that executives have to make as to what to do with our money. And that's a very, very different kind of trust because emotion comes into play, intent comes into play.
The regulatory environment comes into play too.
I'm sorry?
That's where the regulatory environment comes into play, which builds a lot of the trust. It's not them just making decisions.
Absolutely, and the regulatory environment has also incentive. And so you have to trust all the incentive that's not just in the banking sector and the custodial account sector, but also what is the incentive behind the regulatory environment that's been put into place. It was mentioned earlier that some of these regulations, after you've passed all of the hurdles, you pull up the ladder. That's an incentive. And we're now trusting that those are good regulations and that they aren't just regulations that the people that all are benefiting from them want to leave in place. Now, trusting math is a completely different kind of trust. And that's what I'm trying to point out. Yes, we're always going to have to trust something. We're going to have to trust somebody. But the point is, what is it that we're trusting and how dynamic is that? Or is it fairly static?
So we arrive at the end of our session. I have one last question. It's about the business opportunities. You all have a core business. So you're focusing on it. Your investors expect you to focus on it. Do you see, based on your core business, other business opportunities that could be a good complement to what you're doing and that could help you go faster, for example?
I'm really excited actually about what Bitcoin is doing for not just decentralizing currency, but also what it's doing for providing better digital security. And before Bitcoin, we really never had a good reason to implement good individual, personal digital security. Ask yourself, how many people send encrypted messages? How many people encrypt their hard drive? How many people back up their data? Most people don't, because the technology wasn't really ready for us. The technology was hard to use. It was meant for IT departments. It was meant for technologists. With Bitcoin, we now have to secure data. Data now becomes money for the first time. Before it was just information. It might have been our photos, might have been our documents, but for the first time, 40 letters and numbers can hold an infinite amount of value. So the importance of having awesome digital security at an individual level combined with great multi-sig technology as well, but still, even at the individual level is now paramount. And so what we've built is an opportunity to actually give good digital security to the individual. But that doesn't have to apply just for Bitcoin. Once you can secure what we call a private key to hold money, we can secure other digital assets. We can secure a private key for authentication. Right now, a lot of people have to remember potentially hundreds of complex, different logins and passwords to authenticate with banks, email, various websites, forums. All of that can actually use private public key cryptography for authentication. It's been used for almost a decade, but by IT administrators, SSHing into terminals and whatnot. Why haven't the regular people used it? Because we don't know how to handle the security of a private key. But once you solve the ability to do that, then we can secure many other things. We could secure the identity, our authentication, our credentials, our money, or potentially our stock, our bonds. We can now represent more things in digital form because we figured out a way to secure that digital data, and that's been our goal.
Anybody else?
I have to agree with Paul on that. I mean, authentication and authorization are two of my biggest passions, and Bitcoin provides a roadmap for us to basically solve these problems once and for all. You can have a Bitcoin wallet that is your key to unlock your entire digital life. You don't need multiple passwords. That's stupid. Actually, having the concept of a password is pretty stupid. Sharing your password with a website and having it on both sides of the wire and sending your password over the wire is stupid because it can be intercepted. We come up with these schemes of like, oh, I think my password's secure because I added a letter, or a computer can break that in like 30 seconds. So anyway, he explained it way better than me. What I also am interested in is on the smart contracting side. So I think you're going to start to see a lot of innovation in finance where you can you can basically encode a mortgage, for instance, into a contract that is executed entirely on a blockchain, and the rules for that contract, that mortgage, are enforced on the blockchain. And so you basically eliminate lawyers. And I'm in a law office. I will stop right there.
Make their job easier.
I mean, make them.
Make their job a lot easier.
I think on top of that, so with the smart contract side of it, the sort of logical outcome of that is you can actually build entities, legal entities that are autonomous as well, and that run on blockchain through what we would call an oracle that can then sign a transaction like on a system like GEMS to, let's say, pass a board action, or any number of things that require multiple levels of authorization from an entity, whether it be a small business or a large corporation. So I think we're years away from that, but that's one of the coolest things that I think about is actually businesses that run themselves with human input only when necessary.
Yeah, and just about, I mean, just anything that has a ledger, right, is fair game for the blockchain. Real estate titles, car titles, a lot of government services. My favorite's voting, right? Watching the Indian elections last year, as we were, bringing our Bitcoin processing platform to life, I had a whole different view of the largest democracy in the world stumbling to count votes, right? That could have been done in 24 hours on a blockchain, and I think that's it. It's anything. You need transparency. It needs to be trusted. It can now be automated. Okay, there are lots of cost efficiencies that are going to be wrung out of government services. Okay, as a result of blockchain technology. That's my prediction.
No more hanging chads.
Okay. So thank you very much. Our next event here in San Francisco Bay Area will be July 16. It will be with Mr. EMV, it will be a fireside chat at CityCop. We'll have also another event at App Nation that we're organizing that will be about the impact of IoT on new business models. So, and we have maybe one in preparation south in California on Bitcoin as well. So, thank you very much. And now the drink and food and networking is all yours. Thank you.
Thank you, Danielle.